Hi folks, Gettess here with the Market Sense for the week of November 3rd, 2015. As normal, we're going to look at some charts that come from the Trade Navigator software. And looking at the bond market here, the U.S. Treasury bonds, you can see from this high here down 3 weeks later to this swing low, that's basically set the range for everything that's happened since. They are breaking down now, breaking down through some of the support we've seen here. We were looking at maybe 156.10 holding them. That has not. The next level here was 55.04, let's call it, and they appear to be breaking that as well. But, they could go all the way down to 151.24 and still basically be within this range. So I don't want to get too excited about what we're seeing here. Of course, as long as the Fed talks about raising interest rates, don't see a rallying bond market when that happens, right? Except they were talking about it back here, and look what happens. So we just got to pay attention. They look like they're breaking down. They probably will continue for a little more. Of course, I say that. We have 3 days of employment reports this week, so things could change drastically. And if we look at stocks, of course, have a completely different viewpoint here. And the move off of this low, the sort of a retest low here, is just incredible. I don't believe they'll make a move like this without going to new highs, which would be 21.17 in this contract. Doesn't mean they have to do it instantaneously. Doesn't mean they can't back off first. In fact, I would love to see them back down to this lower moving average here. It's around 2015 this week. There's probably enough schmucks like me who want them to do that it can't happen, but they could go that low and it wouldn't make a whole lot of difference. The best support this week is actually closer to 2045, which is the green moving average here right in the middle. And obviously they're staying well above that too. Initial resistance 2095, they appear to be breaking that, and so they might just go to new highs this week. As mentioned in the bond market, I think we're kind of dependent on reaction to the employment reports, plural. We have 3 days of them. And of course, Friday's really the big one. That's when we get the monthly employment report. And obviously that matters more to the Fed than anything else. So the markets will both be looking for clues of that from that report to see if they can determine how likely the Fed is to take action in December. Fed wants to raise interest rates. Draghi and the ECB talk about they're going to lower interest rates or maybe do some quantitative easing. Kind of tough to see those things happening at the same time, but I don't know. Stay tuned. We'll find out. That's what we've got for you today. I hope you can find something profitable to get yourself involved with. Thanks for checking in to see how we're looking at things.